It is Street Smart's top 10. All right, number 10, JPMorgan down almost 1%. The bank reporting first quarter profit rose 33%, while revenue fell 3.6%. Cost cutting and lower reserves for bad loans helped the bottom line. CEO Jamie Dimon says that grappling with new regulations and strengthening internal controls are the bank's top priorities.
Eli Lilly down nearly 1% today. The drug maker plans to cut hundreds of workers from its U.S. sales force, sadly, as it prepares to deal with the loss of patent protection for two more of its top-selling drugs. Eli Lilly hasn't disclosed the specific number of cuts, but has said that they will happen by July 1st. Going the wrong way. We want to get Americans back to work, Matt.
Well, Infosys may not help. It's number 8. Shares are down 21%. It's an outsourcing giant in India, falling the most since 2003 after reporting lower quarterly profit and forecasting subdued revenue growth. Infosys cites fragile business confidence in the U.S. for the disappointing outlook.
All right, number 7, M&T Bank falling more than 4%. The lender says that as a result of regulatory concerns, it will need more time to complete its $3.7 billion acquisition of Hudson City. M&T says the Fed is concerned about procedures related to its anti-money laundering compliance program.
And let's talk about Ashland. Shares of the chemicals company are jumping 10% today after hedge fund Jana revealed it acquired a 7.4% stake in the company and has spoken to management. Jana now owns about 5.8 million shares in Ashland, making it the second largest shareholder right after Fidelity.
Number 5 is Macy's and JCP, a double for you. A judge says Penney can sell certain goods designed by Martha Stewart in its stores. The troubled retailer, along with Martha Stewart Living, is being sued by Macy's, which claims it owned an exclusive rights to Martha's goods. However, Martha's lawyers said yesterday they don't care anymore anyway. They don't want to sell any of their stuff at JCPenney. So it could be a non-issue.
Ouch.
Well, it could be a non-issue for another reason as well. JCPenney, are they going to be able to survive? They don't seem to have a plan. That's
apparently Martha's lawyers don't think so.
Well, in JCP, now they're looking for $1 billion, right? I mean, it's a little odd that they're all of a sudden desperate for $1 billion loan after after they ousted their Ron Johnson, I should say.
Think about what they've spent. Their CapEx in order to try to transform the stores has been absolutely staggering. Howard Davidovitz of Davidovitz Associates 2 days ago telling us the wealth destruction, if you can call it that, within JCPenney, unlike anything he's ever seen.
Yeah, he was pretty fired up.
He was fired up.
Always fired up.
Disaster.
A disaster, sis.
Lots of hand movements, too.
All right. He's the best.
Number 4, LinkedIn up 3% right now. The professional networking website is paying about $90 million to acquire the mobile news reading tool Pulse. More than 30 million people worldwide use Pulse's e-reader applications on devices running both Apple and Android-based operating systems.
And Starbucks up about 1% today. The world's largest coffee shop operator lowering prices for its packaged coffees sold in U.S. supermarkets and retail stores next month. I guess that will help them gain share, what they don't already have. The cut by Starbucks, by the way, follows similar moves by competitors amid falling commodities prices.
Number 2, Wells Fargo falling 1%. The country's biggest mortgage lender posting a first quarter revenue drop and narrowing lending margins. We've got a first on Bloomberg interview with Wells Fargo's CFO Tim Sloan coming up. It's one you definitely do not want to miss. Trish?
You certainly don't. All right, it brings us to our number 1. It's not a stock today, but a commodity, gold, plunging to its lowest price since July 2011 and slumping into a bear market. Gold has been falling this year as investors anticipate a stronger U.S. economy.